Hello everybody, happy Friday, welcome to the TraderMerlin Show. Of course, my name is Merlin Rothfeld. Hope you had a great trading session out there today. Terrible week, Thomasina. It was a good week. There's some great action, some great volatility, as Friday tradition will dictate. Cheers, everybody. Hope you had a good trading week out there. And a shout out to Carter and David. They sent me this for my birthday. It's a baby blue corn whiskey. It's pretty damn good, I must say. So cheers to everybody. Hope you had a good trading week out there, even though you said it was a terrible week. I hope it was a good one. All right. Now for today's show, everybody, it's going to be a lot of Q&A, also a lot of numbers. I'm going to be going over a bunch of charts. Yeah, big blue corn. We all know this corn whiskey, but they use a specific blue corn, which I think tastes a little bit sweeter. Pretty damn good. No, sorry guys, no costume. I know, Mark. It's a travesty. It's the first time in 25 years I'm not hosting a Halloween party, which to me is just insane. And normally I'm the guy who goes all out for Halloween, and I'm not doing anything this year in regards to costume, so I feel like I'm letting myself down here. But hey, you know what? Got to be socially responsible. Don't want to be the one causing a COVID spike in my area. So let me dive into it. I got, like I say, so many different things to talk about today. Let's start off with my wonderful graphic here, which it was just going to be kind of a Halloween-ish type of picture, but I thought I'd throw a little blood on there for the way that these markets turned out. I'm going to start with just looking at the calendar for today, just to get a sense, because there was a question about some oil companies and purchasing some oil companies, and I want to get to those. You have AbbVie, ExxonMobil. I'll just read the oil companies, which I think are of the most interest. You had Chevron, Exxon, and Phillips 66 reporting today. They almost all beat. Actually, they did all beat. Everything you see here beat on the day, but nothing overly dramatic. So that'll set the stage here going forward for what we're going to talk about with regards to earnings and some of the oil companies. Now, this one just came in on the Twitter feed, which, if you guys follow the Twitter feed, I don't usually post too much. I will try to do better. I'm not a social media guy, not that good at it, but I'll do my best. Scott says, just went long Twitter. Am I crazy? Seems a little excessive. And before I dive into the craziness of that potential trade, we'll certainly look at the chart of Twitter here in a second. This is why I am so adamant that everyone stay away from earnings. I know it's so exciting. I talked about this in my workshop when I did for OTA on Wednesday night, is the uncertainty of it. Twitter's earnings, if you were to look at the numbers I'm going to post here, and I'll show you guys their the earnings sheet that came out yesterday. Nope, that's the wrong side. We'll go this one. The perils of working with three screens today. Here is the earnings announcement that happened yesterday, right? This is after market close, and of course, everybody was beating, but I made a point to emphasize Twitter because Twitter was so far ahead of expectations with regards to earnings. The estimate was it was going to make 6 cents per share. They came out at 19. For all intents and purposes, people should be thinking buy, right? That looks just phenomenal to have those kinds of numbers. Well, yeah, it is. But it wasn't really about the earnings. What happened yesterday after market close is obviously the earnings numbers were great, but it was more a concern of what is the subscriber base doing, right? That's because that's how they're monetizing things. And those numbers weren't as good as expected. I think they expected it to be something like 195 million monetized users. It went from, I think, 188 to 189. So that was a big shot across the bow for Twitter, meaning their revenues may be going much lower going forward because they don't have the subscribers. So let me show you the chart here of Twitter today. Obviously, Twitter's had a phenomenal run since those March lows. Of course, everything has. Today, you see this gigantic gap down, and then it just kept on falling. All in all, it was down about 21% today. And, we have people who are interested in buying that. And that's the question that Scott poses here. He says, am I crazy? No, you're not crazy. You just have to put things in perspective. You're looking at a 21% drop and thinking, wow, this is at a big discount, but also take into consideration how much it has moved up, right? A 21% drop, and it also rallied from these March lows to the peak here. You're looking at a 164% move to the upside. That's pretty darn healthy in less than a year. So I don't think you're crazy out there, Scott, to be thinking about potentially buying into Twitter here. It's just a question of how strong are your convictions that they're going to bounce. Right, this might lead to more sell-off as maybe they reach their quote-unquote peak capacity for users, or not capacity from an infrastructure perspective, but from people just choosing to use Twitter and moving on to different social media sites, which I think is what we're seeing. I like to think I'm rather techie And I'll tell you, I've got so many people asking, are you on this? Are you on that? Are you on this thing? I'm like, I don't even know what that is. So I'm trying to stay in touch with all the technology, but a lot of people are kind of migratory when it comes to these platforms. Twitter's been pretty dominant for a while, but maybe it's that point where now people are just moving on to the latest and greatest thing, and that could be what we're seeing reflected on this chart. So I will say I actually was looking at selling some puts on this one down a little bit lower, but I just said the risk is too great for me. I was going to sell puts right around the 39 mark. The reason being, I do think it's fallen a little bit too much. I think it's a little bit of a knee-jerk reaction here, but it also would be coming down into an area of demand, so I wouldn't feel too bad about potentially owning Twitter at that low price point of 39 bucks. Now, that said, we do have elections coming up this week. For that reason, a lot of my, I guess, normal tactics I'm going to do, I'm slowing down a little bit. I will take it a little bit calmer going into at least Wednesday, and I would encourage you guys to do the same. Because we just don't know where it's going to go. This election thing is going to be nuts, and that just represents uncertainty. Yesterday we had every one of those FANG stocks report great earnings. All of them. Their numbers are really good. And of course, that's what brought the market down today. I mean, we were close to breaking even for the month of October until those FANG stocks reported, and then all of a sudden dragged everything down into negative territory. So let me go and show you that real quick, just so we can get a sense as to how this month ended. Everybody thinks October is the worst month. It's not. September is the worst performing month. October has had the most historical, monstrous crashes. But let me start off, I'll go from bottom to top. I'll bring up the crude oil chart. Crude oil for the month, not looking so great. And mainly it's just the last couple days. Last week and a half has been what slowly started to turn this thing to the south side. But the percentage that has moved is substantial. It doesn't look like much, right? I think that we're in a pretty dangerous point for crude oil because it's slowly starting to make some new lows. If it gets below this area of congestion that you saw back here in May of this year, there's a pretty big sharp fall. And I just don't see oil going all the way down to 25 bucks, but it potentially could. Now, as far as percentage moves for the month, I'll switch this to a monthly real quick, just so you guys can see the red candle it's formed. It may not seem like much, but that's an 11% drop. If you go close to close, closing price of crude oil for the month of September to the closing price of October, which is now in the books, you're looking at a slide on crude oil of almost 12%. Yeah, down 11.98% if I'm using the CL futures. So, those numbers might change slightly, but gives you an idea. That's definitely the worst performer out there. I will stay on the monthly chart here. I normally don't look at the Dow Jones Industrial Average, but I thought it was noteworthy because it's your worst performer from the Big Four index. Is down 4.43% for the month. Now, most of the damage on the triple Qs happened in the last 48 hours, right? I'll go to a .D just so you can see the move here. It certainly has been drifting down, but the big damage I think really was inflicted after hours last night. That set the tone for more downside, I believe, in that tech sector because of the expectations that were levied on Facebook, Apple, Amazon, and Google. Some people thinking it might be an overdone knee-jerk reaction. Whatever you think, month of October ended down 2.93% for the NASDAQ 100. Very close in the heels there was SPY, S&P 500. Actually coming off the lows, we had a pretty long bottoming tail on that SPY today. Bounced back up, only down 2.45% for the month of October, but it's still down. Now, here's where things start to get a little bit better. I'm going to go at GC. We'll bring up the gold futures. The monthly, it doesn't look too bad. It's only down 0.95%. Yes, there was a little bounce today of just over 0.5%, but it's really been traversing sideways for most of the month, and now we're bouncing off some lows. So our top two are going to be, looking pretty darn good, especially with regards to rate of return. Now, Russell 2000, IWM, small caps, as we know, looking at this daily chart, had a huge run in early October and has been slowly giving it back. And to me, this one, I don't know. I'm iffy on what I want to say about Russell 2000 here because generally this is considered the canary in the coal mine. The way we have this little gap here, it's kind of like an island reversal. You have these three candles sitting in a row, kind of sandwiching each other right here after it closed this gap. That is, I'm really just waiting to see what happens on this bad boy. That said, even though it sold off from 164 on IWM down to 153, you're still looking at a 2.22% gain for Russell 2000. Now, I get to gloat because obviously you guys know I'm a big crypto proponent. And if I look at the Bitcoin futures, you want to talk about a great month? This is the daily chart here, and October obviously starts where my cursor is at, and it was pretty much at the lows. Now all of a sudden ripping up significantly, 25% gain for the month for Bitcoin, which of course has brought up a lot of the altcoins as well, but Bitcoin really the lead dog in that area. That was your month. That's why I wanted to kind of go over the monthly totals here just so you have a sense of perspective of how we performed. And I'll try to do that every month on the final day. Okay, so we talked about overall markets. I talked about Twitter a little bit. Let me see if I can go to... Good, Big Eb. Dipping in the crypto world, huh? It's interesting because you saw some other cryptocurrencies slide today, right? You had, Ethereum was down a little bit, Litecoin was down a little bit, but Bitcoin was up. Just to me, proving that that's where the main interest is. It is still the big daddy out there in the crypto space. All right, what else was I going to go into? Listener questions. All right, this is a good one. This one came in from Karen. Karen says, I wanted to buy some Intel as it is down so much the last 2 weeks. What do you think? Well, we always talk about the perils of trying to catch a falling knife. Intel has been looking real bad. On a daily chart, this is appalling, and I'm hoping that you don't own it, and they're just trying to add to a losing position here. Here is Here is the chart of Intel, and you guys can see back in mid-October, Intel was at $56. It's at $44 now. So a $12 drop is pretty darn significant. You look at 20%, 20 plus. My math skills aren't that great when I look at those types of numbers. We're down 21% off of those highs in just 11 days. Now that tells me that something's wrong with Intel. That's probably an internal memo or internal information that somebody's using, I would say illegally, and trying to get out of Intel before maybe the news drops. But Intel not looking so great. That might actually be off an earnings announcement. We'll check that in a sec. But it's just drifting down. Buying Intel because it's just low, I think, is a mistake. I think buying anything, and this goes back to the same one, I believe his name was Scott, was asking about Twitter, buying something that's just cheap, I think that's, long term, that's not a strategy that's going to work in the markets. Now, let's ask two things. When you're looking at buying something that is oversold, and you might be right here that it's extremely oversold, I can bring up Bollinger's or Stochastics or MACD, whatever you want to verify that, but the chart says it. Two things you want to ask yourself is, how does this specific security look relative to the other peers in the peer group? Is it the one who's bringing the index down of that like stocks? Or is it one of the stronger ones? So I'll look at that. The second thing you want to ask yourself, if you're looking at buying anything that's in a free fall mode like Intel is it coming into an area of demand where I might feel interested in buying this? Okay, now let's look at the second one I mentioned there, which is it coming into an area of demand? I'm just going to put a line right across the low we established today. I'll put one right across the high for today so we get a sense as to range, which is 3160 to 4480. Now, I'm going to change the time frame here probably because I don't think there's anything in the recent history. Well, so there you go. I mean, look, you got one piece of information that looks good at this point, and that is Intel has fallen extremely aggressively into that point of the March lows. Not to say that it's going to hold, but it is in fact at an area of demand. So you have a positive piece in your favor if you're thinking about going long Intel right now. Now, how about we look at some of the competitors in that industry? And the main ones I can think of right now, of course, I see that Zook said Intel got destroyed until they can get any nice CPU to compete with AMD. God, you guys remember, if you go back 6, 7, 8 years, it was the exact opposite. I remember that exact same comment, Zoo, coming in the opposite way. AMD is going to continue to get destroyed until they come out with a chip to compete with Intel. And all of a sudden, we have completely flipped the script here, and now Intel is the one scrambling to get up to par with what AMD has. It's crazy how things change. So let's look at some charts here just to gain perspective. So first thing I'm going to do is bring up SMH. Okay, so this is a semiconductor ETF, and let me. Wow. You wonder why the markets are at all-time highs? This is it right here. Technology just being brought up by semiconductors and chips. I'm going to do two things. I'm going to shrink this down here a little bit, so bear with me as I adjust my screen to fit this. And what I want to do is put them side by side. I'll put Intel on top, and then I'm going to put whatever our reference point is going to be at the bottom, just so you guys can see how they're performing relative to each other. So on the top, I will put Intel. And if you look at this, clearly Intel is broken. I don't know what. I don't particularly care. You guys see that bottom chart? That's SMH. That represents the entire, not the entire, but the vast majority of semiconductor companies. And of course, they're in different facets of the semiconductor industry. But clearly, Intel is broken, right? It's not even coming close to following that trend. So what if I look at this compared to AMD, which will probably look a lot better? AMD, stair-stepping up. It's looking a little weaker right now. It's actually at a buy point, in my opinion, at $75 on this chart. But it's obviously looking much stronger moving to the upside. What about, let's see, who else you want to compete with them in this space? Nvidia. So we'll go check out Nvidia. Nvidia's amazing growth, amazing strength. Now it's stopped making new highs in mid-October, but it's still looking decent from the long-term perspective. So it's challenging for me, Karen, to think that you should want to buy Intel. The only argument you can make is that it's sold off a lot and it's looking cheap right now, and it's right in an area of demand. As far as what's going on within the company and fundamentals, which I'm sure many of you guys are going to be deeper into the fundamentals than I am, I don't like it. Sorry, I'm sure some of you might disagree and say, hey, go with buy some Intel because it's cheap. I just don't think that that's a good strategy. If you are buying Intel based off this area of demand, I would go and put your stop loss below. If it breaks 43, dump it, move on, because I agree with that comment that came in here just a little minute ago, which was from Big Eb. Intel is a loser. Right now, looking at the charts, they're a loser, period. The charts don't lie, and that's telling you something's fundamentally wrong. They just can't seem to get a bid under them and move higher. So, Karen, I'm going to have to give you a thumbs down on buying into Intel here. The only reason I think maybe you want to buy is for a little bounce off of this area of demand. But I'm not expecting to close this gap. I just don't see Intel having changed anything. They still look weak, so stay out of it. Yes, and this is my next train of thought here was going to be, if you really want it, you could be selling puts, and that's one thing I like to do on anything that I'm considering owning. I'll tell you about my IWM puts, that I put on Wednesday. That was a fun trade. But Big Eb says if you want to own Intel, sell puts at like $40 or something. Agreed, and you could probably even go lower. It depends on what kind of premium you want to get. But let's go to a weekly here. I mean, look, this level is an attractive point. It's been just kind of sitting there for the better part of over 2 years. So yeah, maybe 40 becomes your buy point. You could sell $40 put options on Intel for however many shares you wanted to buy. If it gets down to 40, great, you own your shares. If not, you're still collecting premium along the way, and that's probably what I would be doing if you really had conviction that you wanted to own Intel for the long term. There you go. Cool. Now that you guys had me there, before I lose my train of thought, as I always tend to do with you guys, I was looking at IWM. So in one of my accounts, I think I'm telling you, I do quite a bit of selling of options, and usually they're monthly. It's just to generate a 1% rate of return per month in that account or more. That's my goal. So generally, the options I will be selling, I'm going to be looking and calculating out the premium, how much I receive per amount invested, and finding a level where I'm comfortable owning it. And if I get it, I'll own the shares and I'll sell covered calls against those. But the whole goal is to get at least 1% rate of return per month in this one specific account. Now, what was interesting is the options on IWM on Wednesday were paying a pretty good amount for 2 days. So I sold some puts on Wednesday that were expiring on Friday, today. And what's interesting is they were the 152.50s. And I was like, oh man, you saw what happened today. I'll bring up the chart here, and I'll go to, let's go 15-minute time frame, which will give us a few days. I thought you guys might like this. I'm going to put a line right at my strike price, which was 152.50. Oops, let me type it in up here. 152.50. So I sold those. Was it? Yeah, it was yesterday. It was actually early in the morning on Wednesday. It was like at 155, and I said, you know what? The rate of return was so attractive. For committing $30,000, I was basically getting a 1% rate, a little over 1% rate of return for 2 days. And I'm like, you know what? I'm okay with that. And I'd be okay owning IWM, no problem. So you guys see, over the past couple of days, it's definitely dipped below this 152.50, and I was like, okay, well, if I get it, I'll get it and I'll own it. And so I was watching this close, and I'll even go to 5 minutes so you can see the window of time here. Right into the close, we're like, oh, I guess I'm going to own IWM here, right? Because it was below 152. For those that don't know, I sold puts, which means if it's below 152, I'm committing myself to buy it. In this case, it was down for the last hour below 152. So I was almost 100% certain I was going to own IWM at 152.50. And all of a sudden, in the last 5 minutes, maybe in the last minute, it was just straight up for 3 minutes, which popped it above the 152.50. So basically, I get to keep my premium with no risk of owning the shares. That was kind of a fun way to end the day for me. Little perfect adjustment to the way the week has been going, in my opinion. All right. Cool. Sorry, I just had to share that one with you. I also had another good trade a couple days ago. I'm really kind of shying away from saying the trades I'm in simply for one reason. Almost every time that I do, those trades go against me. I'm almost becoming superstitious with you guys, where I'll say, hey, here's what I'm in right now, and then I tell you position, entry, stop loss, and it just takes me out right away or turns into a bad trade. So I was in, what did I just close? Pinterest. Well, Pinterest was an interesting one. I'll show you that chart here real quick just so you guys can see. One of the things I like to do is I like playing with the high flyers. So Pinterest is a stock I've never traded before, and it was actually opened yesterday. And the reason for it is basically I put a line across the low of yesterday, which is 63.75, and I had a little bit of I had it on my screen watching it. And as soon as we broke 63.75, I just shorted some Pinterest, right? Just shorted, not a lot, but just enough to have some fun. And then the way it ended yesterday, I decided with the earnings announcements and kind of the negative gap fill that I anticipate happening here in Pinterest, I took it home overnight and then this morning closed that one out. So that was a nice trade, simply off of a gap fill potential. Real basic, nothing really over the top there. And then Snap, I'm still in. Guys, remember I told you I sold some puts on Snap. Or actually, I bought puts on Snap. And we'll go to the daily on that one because it's just it ripped up for a couple days now. It's pretty much right back to break even for me on Snap. So there we go. Yeah, Joseph, I was just pulling up a 1 minute. Only reason for that was just so you could see how quickly IWM moved in the last 3 minutes of the market, because I was almost for sure I was going to get put those shares and own IWM. I was like, okay, great, I'll own it. And it just, boom, shot straight up. There we go. The walk-off home run. Yeah, it felt like it. I mean, look, you're not making tons of premium, but, you know, if you find things like that, where I think the final number was like 1.5, so I had 6, it was $600, it was 2%. 2% rate of return for 2 days. Now, of course, we could always extrapolate that and annualize it, but I think everyone would agree that if you get a 2% rate of return in 2 days, you should be very, very, very happy with that. Normal goal for that account that I did that trade in is minimum 1% rate of return per month, and then the goal is to continue to compound that specific one. That's the objective of that account. And just so you guys know, I have written rules for every one of my accounts. Actually, let me take that back. Not everyone, but there are specific accounts that have specific sets of rules. That one account is only for options trading, and it's only intended to be collecting premium in that account with the intent of selling enough premium to get 1% rate of return per month. Other accounts, I'm allowed to buy directionally and be a buyer of options as opposed to selling options and collect premium. Okay. Okanola, let me get through these questions and I'll go back to Apple. Apple obviously was one of the main reasons we saw what we did today in the equity markets. Let me go back to questions and make sure I get through all of these. Mark, I kind of chuckled when you sent this one in. I don't really know what you want to know here, but you just said UPS with a question mark. All right, well, I don't know what we want to talk about there with UPS, but let's bring up UPS. I'll start off as Tilly Allison does, just to blow the minds of everybody's watching. I'm going to start with a monthly chart. Oh my gosh, a monthly chart. He never does that. Let's go .m. You know, the chart we see here, if you go monthly, I love the chart up until 2020. Right? I like the trend. I love what happened since 2009. It actually was showing some weakness from 2018 to 2020. And then all of a sudden, COVID hit and this thing just went parabolic. Those are the tough ones to perform technical analysis on. Now, because we have such a huge move on this monthly, my expectation is that it's going to revert and go back down towards its mean. How could we find out what that mean is? Well, there's another question coming up about moving averages, but I'm simply going to add a moving average on here just to give me an idea of where that might be. Now, these are different time frames. There's a 50. I don't want to do a 200. I'll do a 50, and I'm going to do a 20 period moving average. All right, so bottom line is if you look at the average over the last 50 days or the average over the last 20 days, it's pointing to something right around this 117 to 120 mark. Well, to me, that's what will probably happen, is you'll probably see this drift back down. Now, of course, you guys have to take it that this line is trending up. So as the market is, or as UPS is falling, this line will still be moving up. Therefore, it'll probably meet that line somewhere around 135, maybe 140. Who knows how quickly UPS is going to fall. On the daily time frame, though, you got to look at it from a kind of a floor perspective. When I say floor perspective, I mean that you're sitting right near that floor. And I'll put a line across those lows that we saw back in early September. That's what we've basically established as that line in the sand, the proverbial line in the sand. Now, if that line gets broken, and that line, for those of you listening to the podcast right now, is 154.63 on UPS. While I love UPS, and while it was, I think I told you guys the other day, it's so bizarre for me to sit here. I was actually watering the yard yesterday and trimming my banana plants and my guavas, and this guy rolls up in some kind of hoopty Isuzu Trooper thing. It was a beat-up old car, and he jumps out with a little UPS vest on, and he walks up and he hands me a package. I'm like, there we go. It's the Uber package. You got Uber Eats, Uber car, and now Uber package. It was so weird. Anyway, so many people are using online services and purchasing that these guys are maxed out. Now, that's going to relent a little bit here unless we go into a major shutdown. Of course, France now is going into a shutdown again. Who knows how bad that's going to be, or if it does happen in here in America again. But I think that a lot of the growth that we've seen in UPS has been obviously because of COVID. And as we start to get back to lives as normal, that will revert back to its mean. So I think right now, if you're buying, it's the same thing as we looked at with, what was the other one we looked at? AMD. Right now on AMD, similar picture, right? You've got it sitting right at a demand zone. And it's basically has not been able to break this for the period of 3 months. So if you're looking to go long UPS, I'm still not feeling overly bullish on it, but until it breaks below 154, call it 154 and a half, you've got no reason to be against it, right? Stay long on it. The only real thing that freaks me out is there's a gap here from July that goes from 123 all the way up to 137. That's a $15 gap, obviously earnings related, but those tend to fill. If it does, that would be right back to our reversion to the mean. So I'm a little bit skeptical on UPS able to maintain this upward trajectory, but hey, it's all about perspective and time frame here. So if you want to take a stab at it, great. Just make sure you have a stop loss in place at 154.50 or below 154, because that gap could fill very quickly. There's also another area of demand that would probably slow it down right around 145, but that's that'd be $9 away from the first point you should be getting out at. Okay, and feel free to chime in, guys, if you have any thoughts. I will gladly bring those up here. Short the daily gap candle. Well, I think so, but that's a long drop, right? You're talking 157, closing that gap at 123. That's a pretty decent drop out there. Okay, so Mark, I don't know what you wanted me to cover with UPS. That's what I got for you. Not pretty much that. Buy it if you want. Be careful. My preference would be to wait for it to break, because I do think you're going to see some more market weakness come in. Wait for that break of that 154 mark and then just start shorting it. Tom says UPS will be maxed out and charging huge premiums for Black Friday, actually Black November through Christmas. Yes, they probably will. I'm trying to think of a dance around here for it, because obviously you have FedEx, you have some up and coming package delivery services. Amazon is going to try to take care of most of the bulk of their transactions by themselves with their shipping network, but we'll see how that's going to be. Richard says, would the up and coming holidays help UPS? For sure. I mean, we know that's when the mass consumption is going to happen. What's really interesting, and I don't know how this is going to work, guys, one of the more embarrassing things, and I know some of you love this, it's just for me personally, I find it embarrassing as an American, is Black Friday, where people go out and they line up, they'll spend 8 hours waiting in line for a store to open so they can get some toaster that's a piece of crap from China for $5, and normally it's $13, and they feel like they got a great deal. Black Friday just blows my mind, and you see fist fights, and just the worst of humanity seems to come out at Walmart on Black Friday. I mean, just put in closed circuit cameras and let me just eat popcorn and watch these fools just beat each other up. So to me, that's just crazy that happens. Now, what's it going to look like this year? I'm hearing Target now is taking reservations, which to me makes more sense, right? You don't even need to wait in line. You just go, my reservations for 3:30 in the morning. I'll go down to Target and I'll buy whatever I got to buy. personally, I'm an online guy, so I'd rather stay at home and not be fist fighting with someone over a pair of socks. But I will be buying myself an 85-inch TV on Black Friday, I will tell you that. I thought actually Prime Day would have some great deals on big TVs, but I want an 85-incher for my living room. I've been waiting for it. Below $1,200 is my buy point for that one. See, you got to have an entry price. My entry price for an 85-inch TV is $1,200 or less. I've been waiting. I got to $1,275 at Costco the other day. Nope, I need below $1,200. Let's see. But so yes, I do think it's going to be a huge boom for UPS, FedEx. However, what's already priced in, right? I think that we've already seen such a huge pricing in, and I think that premium that Tom was talking about, I think may have already be factored in here, right? Because they're the exclusive delivery guys for most of us who are quarantined and stuck at home. So let's see. Tom says, I heard something about Bitcoin that it has historically made a strong move like 10x every 10 weeks above the nominal level. I don't know those facts and figures. I do know that what the pattern is historically since its inception is it goes through these colossal parabolic moves and then it sells off significantly. But it doesn't go back down to where that move started. So you get these huge, parabolic screamers of moves that you just go, wow, this shouldn't be happening. And then it slowly gives it back over the period of another 2 or 3 years. And then it starts all over again, Right now, that's what we're going to be. I think we're in the phase of that next melt-up phase. So what'll be interesting is when we get to 20,000, how quickly we get there. You guys might remember back in 2017 and 18. There were days where it was like, oh, Bitcoin rallied 20% today. And then the next day, oh, it's up 30% today. Oh, it's up 30% the next day. I think you'll get a melt-up phase again like that. Maybe not those pure percentages, because that's obviously massive money when you're dealing with something that's almost $14,000. But I think you'll get that next run-up phase if patterns are indicative. I'll do more research on that, and maybe I'll try to do a special show addressing just that, kind of the melt-up and not seasonality, but the patternness and how it's adhering to those patterns. But I need to get some charts and do some more research on it. Okay, what else do I got? Yeah, I'm not going to go for the 95, 98. 50 grand? No way. Nuh-uh, not gonna happen. I used to do projectors. So when I lived in Italy, I had a really nice projector, and they had these beautiful white walls that were almost like a movie screen. So I had this 12-foot screen in my apartment in Milan. It was pretty awesome. But I want a nice TV because projectors do not work very well in broad daylight. Okay. Do you go with brand name flat screen TVs? Yes, I do. I'm not buying, the crazy ones I can't pronounce. I'm a big fan of Panasonic and Samsung. I'll even go with LG. I always have issues with Sony products, so I'll probably stay away from Sony. But yes, I am definitely a brand guy. All right, let me go to my next question. I'm going to try to get through all my listener questions before I get to some of the other ones that popped in chat here. Kevin says, with all the FANG stocks beating earnings, are you bullish? No. There you go. There's your answer. No, not bullish. I think that they've moved up too much. I do think you'll see some pullback, and then that might make attractive levels, which we'll go into and look at some charts here. Obviously, the last 24 hours have taken a nice chunk out of some of these FANG stocks. We'll start off with Facebook. Facebook obviously having a pretty big drop today, down about 6%. I still think you've got some room down in Facebook here. I would be waiting for it to challenge these lows right around 246, 245, somewhere in there. Those will be the next challenging point for Facebook, but it's still on a pretty big uptrend, right? So I'm not overly bullish, although you cannot ignore the trend, which is something we'll talk about more with the discussion on moving averages, which is a question coming from a viewer. But right now, it's still looking bullish, but my gut just says this stuff has been overdone. So I'm cautious on things like Facebook. I do think you're going to see some more antitrust pieces come to light from both administrations, Democrats and Republicans. Trump already fired that shot across the bow with Barr against Google, which had a big jump up on earnings last night. You can see it pretty much sold off all day, so Google's still looking pretty good from the long-term perspective, although this recent dip, this one right here that happened in mid-September, that kind of made me feel a little bit nervous about Google because it looked like it made a significant low going below the low from August. All right, that's Google. You guys, I'm gonna do Amazon first. I will forever be bullish on Amazon. I don't think I'll ever change my tone on Amazon. I'm gonna stay bullish until the day I die. Amazon will rule the world until antitrust breaks it. Now, that said, We do have an interesting pattern or shape forming on Amazon right now, and I'll draw that out for you guys. This is definitely a weakening formation. You'll notice that these highs are drifting down slightly, and you could also make the argument that that the lows are starting to get a little bit lower, right? It hasn't made a new low at today's trading activity, but we are starting to see a little bit of weakness. You could go all the way back into these March lows if you want, and that could be your second point. But we're starting to see a little bit of weakness show up here in Amazon. Now, I don't know how long that will persist. To me, it just creates a buying opportunity. I think you've got a couple of decent points of buying opportunity. One would be right around 2,900. The next one would be close to this 2,700 on the daily. So I'm still bullish on that. I guess that's the only one in the group. And then we had, I did Facebook. Oh, Apple. Apple was the other one. Similar picture, right? It actually looks prettier. The only difference here with Apple compared to something like Amazon is the most recent most recent high is much lower, right? The high we saw back in September when it did that split was I'm going to call it 138. This most recent high, where if we're in an uptrend, you'd expect this most recent high to challenge that 138 level. The most recent high was 125. So we have a similar picture forming on Apple here, which is clearly a sign of weakness. And where do you want to draw your lines across the bottom? You could draw those anywhere, guys. I mean, you could draw them right through here. You could shorten this line up and draw it from there. Wherever you want to draw this line, you can see that the most recent activity over the past few days has dropped down below this kind of symmetrical triangle, which to me is a bearish sign going forward. We'll have to wait and see. Obviously, Apple is, it's just one of the most amazing companies from a technical perspective that we've ever seen. But I'm feeling a little bit pessimistic on these FANG stocks right now. And remember, I've been saying that, and you guys, many of you agreed, that these companies have been the ones that have vaulted this market to all-time highs in a very short period of time. If they all of a sudden have a big pullback, that could create a massive sell-off in the entire equity markets. Let's see. Big Eb says, Apple have the biggest percent jump on iPhone sales since the iPhone 6. That was 24. I will buy at 96. 96? Yeah, we've got that line mapped out here at 96. I think that's a great point once it closes that gap. I mean, is anybody buying the iPhone 12? I won't be. Definitely not going to be buying the iPhone 12 because, first off, I'm the type of person that will just ride my phone into the ground until someone gives me a free one. But I don't think I really need any of those special features, which they don't seem to be any great features in the iPhone 12. Gretchen, and that's why Amazon will have revenues of $120 billion in Q4. Yeah. I hate to say it. I hate to say it, guys. I have an addiction. And no, it's not to blue corn whiskey, which is delicious, by the way. My addiction, as I think many of us are developing this addiction as we speak, is to online shopping. And Amazon, it's so easy. Yesterday, or 2 days ago, I bought something for my home gym. As you guys may or may not know, when COVID shut down, my gym shut down. So I went and I built a squat rack, bench press. I made my own weights out of concrete, 3D printed templates for all this stuff, and I built my own gym in my garage. And, for me, it was an easy way to maintain exercise at home. But anything I needed, it's Amazon. I needed rubber resistance bands. Boom, ordered them yesterday. They got here, or ordered them 2 days ago. They got there yesterday. I'm addicted to Amazon. I hate. Thank you, Bezos, for my addiction. We're all going to be going to therapy in the future to get over our shopping addictions. All right, what else do I got? Kevin, that was the FANG stocks. Annette sent this one in. And it says, what about gold? Can you analyze the chart, please? Of course I could do that for you, Annette. I'm glad to do so. Gold has been, you know what I'm going to say here. I think all of you guys can look here and see this chart and know what I'm going to say. We are making lower highs. We have been making lower highs for the past 3 months. We are making lower lows than we have for the past 3 months on gold. I was very bullish on gold, certainly at the beginning of the year. You guys have all been here forever. It was really... we were all targeting that 1,700 mark. We ripped through 1,700 and we're like, it's going to keep going. And 2,000 became that logical target. We ripped above it, and now it's just slowly drifting down. Now, you are at an area right now where you could say the floor was put in for mid-September. That's this line right here. That said, I'd be interested in maybe buying at 1825. There's another little area where this big rally started back in July, but it's not looking so good right now. You would be buying counter trend, at least the shorter term trend here, as it's going slowly down. Okay, any other questions I got? Oh, I'm sorry, I didn't even show you the chart. I'm sitting here talking about gold, and I didn't show you guys the chart. There's your chart, and there's that line I'm talking about. right at the current lows as a potential buy point, and there is the 1825 mark where I think might be another good buy point. And I know, sorry Joseph, I was a little late on that one. This is why I want TJ back. I want TJ to no, MG. Oh, sorry guys. See, I messed up again. It happens every now and again. All right, let's see. So that was the gold one for Annette. Long term, I'm bullish on gold. Short term, I'd be very cautious and make sure you have tight stops. All right. Next question was from Heath, and I will make sure I switch it this time. I switched the chart back. Do you think that with all the e-trucks coming to market, that it will hurt Tesla? Yes, I do. I definitely think it's going to hurt Tesla. You guys heard me talk with Sam Evans the other day about the GM Hummer. It's funny, I went and watched the video of that yesterday. If you guys haven't had a chance, watch it. I know a lot of the stuff they're talking about is kind of pipe dream, but what a pretty cool vehicle. But now think you have Rivian, you have Nikola, you have Tesla, you have General Motors. I'm waiting for the Honda and the Toyota versions of some SUV e-truck. And yeah, I think that's going to definitely take away some of the market share from Tesla. And we've seen over the past couple weeks, Tesla, it's no longer the mainstream talk point out there, right? It's just slowly drifting down. Nothing dramatic, right? It's still making higher lows, but there was a period where it was the only thing people were talking about was Tesla. You guys might remember that. It was the only thing. And now it's like, okay, well, we're talking Apple, Amazon, Google, we're talking other stocks. But I do think it'll start to eat some of Tesla's lunch here, if you will. And I agree with Joseph. I think that truck is hideous. I think it looks so dumb. Now, the Rivian one I liked. I think I've shown you guys that before. The Rivian truck looks great. So does that GM one. The GM Hummer, even though it's a Hummer, I think the Rivian has this really cool feature. I cannot get enough of this one. Look at the picture here, the Rivian truck. I love the outdoors. This is a pull-out stove and camping gear and refrigerator and everything you need just slides right out of the bed of the truck. Hello, I'm in. I love that. You've got the Nikola trucks. Not the stock. I want to go to their website. Of course, I won't be able to go to it. Where's Nikola? Look, there, Nikola Motors. They have some nice. The Badger looks really cool, this one right here. But again, I would much rather own something that looks like this versus that Tesla hideousness. Tesla can sell battery later. I think that's where Tesla's going to have the dominance, is their batteries. Right? I think that they're putting so much into, is it vertical integration? I think it is vertical integration. All the different components that goes into the truck. Obviously, batteries becomes one of the most important pieces. Tires and that stuff is secondary. But these things look pretty cool. Then you look at with the E. What was it? The E Hummer. The E Hummer. I mean, this looks sharp. I mean, this looks like a really cool looking vehicle. But it's a Hummer. But this will be out 2021. I think the Rivian's coming out soon as well. So we'll know to hear very shortly which one will be the dominant one. But I do think it's going to eat away a little bit at Tesla. Pontiac Aztek had that pull-out camping stuff. Did it really, Tom? I think that is on record as being the ugliest vehicle ever made. Worse than an Etzel. I don't know how Pontiac came out with that one. You could just say they were ahead of their times, right? I'm going to see if I can... oh, yeah, it had that weird tent thing. Yeah, this... I mean, come on. Would you have bought this thing? I mean, I guess you could argue that that's kind of cool, but that was an ugly, ugly, ugly vehicle. Ugh. All right, well, Elon Musk had to top it. Okay. So Heath, I definitely think it's going to impact and hurt Tesla in the long run. All right. I was going to get into Josh's question on moving averages, but I'm looking at the clock and I'm not going to have time to get into moving averages. So what I think I'll do next week, I think Monday I have open by myself, so I'll probably do it on Monday's show. He was asking about using moving averages as an odds enhancer and things like that. So I might dive into that one on Monday's show. If you guys have any questions too, send them on in. I will do my best to get to any last minute questions here. Now, let me go forward a little bit and talk about Monday. So let me bring up that screen over here. Here's what we got cooking for Monday. November 2nd, obviously it is the end of October. It's done. You do have a couple companies that are reporting that are noteworthy. You have PayPal holdings, which PayPal is now talking about using cryptocurrency. I think that's a huge positive factor for somebody like Bitcoin and whatever ones they allow to pay with. Estee Lauder reporting earnings. Mondelez, which will probably do rather well. Why? Because they sell alcohol. So they're going to come out with earnings on Monday, and then that's going to be after market close. And then Waste Management will come out before market opens on Monday. So that's kind of your economic announcements, earnings announcement. From an economic perspective, there are some big announcements. I will really kind of focus on the U.S. here, but almost everything that's happening on Monday is manufacturing related, right? Manufacturing it's across the board, from European Union to Switzerland to British pound, euro. It's all manufacturing day. So Monday for U.S., final manufacturing PMI, ISM manufacturing PMI, construction spending, and then you also have the loan officer survey, which is a tentative announcement. But that's what's cooking for your trading week for Monday, and that will do it. Are you familiar with the company NIO? I am, Derek. I mean, not like intimately familiar, but yes, we talked about NIO a bit in the past on this program when I did a show on electric vehicles and kind of talking about what's the outlook for them, and a lot of these people are really interactive and we're bringing up some car companies I never heard of. So let's see what else we got. GM is going to share truck platform with Honda. Oh, really? Okay. Zeus says, isn't everything small compared to the election? Not necessarily. Bottom line is, and I was probably rude the other day when I was like, I'm going to reach through the screen and punch you if you don't go and vote. But go and vote, people. I would encourage you, if you have the opportunity. After this show, I've filled out my mail-in ballot, but I didn't send it in because I'm not trusting even the mail system, right? It probably says on there somewhere my political affiliation. I could just see somebody there throwing mine away. So there's a polling place right down the street from my office. I have all my everybody already picked who I'm going to be voting for, so I'm going to go down and use the electronic system. That's the official one. I would encourage you guys to do the same, but please go out there and vote. Make sure your vote is counted. Encourage all your friends and family to go and vote as well. Probably one of the more important elections we have, and we all should make our voice heard. It drives me nuts when after the election I hear people complaining about so-and-so or this person or that person or this policy or this initiative, and like, well, I didn't vote. Then shut up. You have no reason to speak here. Yeah, and Joseph, you said you use the Dropbox. I'm nervous. I'm so untrusting of this whole voting process now that I'm worried that if I put it in the Dropbox, that again, someone could take it out and see my political affiliation and go, oh, I'm throwing that one away. Or they might misrecord my entries on it. So I'm going to go do it right after the show today, put that sticker on my chest proudly, and call it a vote. But yes, election is probably the most important thing. Earnings next week are not that great. There are some Fed announcements coming up later on in the week, which I'll talk about on the show, and we can address that when it comes up. All right, any last minute pieces you guys want to bring up real quick? Because I'm looking at the clock, and Big F's probably going to push me to do an hour show. But I'm like, you know what? I got a glass of whiskey here. I'm going to go take my dog for a walk around the block. Maybe even go to the polling booth. I'll just claim that he's a service dog. Yeah, he's a 115-pound service dog. Get my vote in with my German Shepherd and do my part for patriotism. All right, well, if I don't get any last minute questions here, and I got to account for the delay, we all knew you're a proud Republican, no sweat. Here's what's really it's not funny. It's interesting to me, and I think you guys would all agree. If you go back, I'm going to say 10 years. 10 years. If you said you were a Democrat and the person that you said it to was a Republican, they would be like, oh, you're a Democrat? Oh, you're a Republican? Oh, it's okay. Sure, let's have a drink, whatever. Nowadays, if you say I am a Democrat and you say it to a Republican, they're going to be like, oh, well, F you, you're a Democrat. And vice versa, right? The Democrats will look at the Republican, oh, F you, you're a Republican, you're stupid. In all honesty, I think we would all agree, and maybe I'm putting words in people's mouths, but if you look at the different platforms for each party, Democrats and Republicans, we could cherry pick pieces out of both parties' objectives, right? Their historical objectives. Say, I like this piece, I like that piece, I like this piece. And honestly, if I had to put myself into a category, I'd say I'm middle. I think that I find myself finding some policies from the Democratic Party I'm approving of, while others I don't. And the same thing for Republicans. So to label myself as saying I have to vote for this party because it's on my ballot, that's what my party is. The way I do it is, I vote for who I think is going to do what's best for the country and be presidential in the process. To me, the term presidential means something to me. It means that there's a certain way that you should treat people. There's a certain air of diplomacy, and you should be making me proud in the process. So, these are all things we have to consider every time we go to a ballot box and make a vote, not only for the president, but also for senators and different elected officials. Costa Mesa, where I'm at, has a ton of different elected officials. So, we have a privilege, we have an honor that we actually get to vote, right? Some people don't get to vote, have no choice, and they're in a dictatorship. So I think the best thing that you and I can do to make, I'm not just say our founding fathers, but all the soldiers who may have died for the freedoms that we have today and the ability to vote, best way to make them proud is go out there and vote. Don't be hesitant and I don't want to, it's not going to make a difference. It absolutely will, and you'll feel better about it. Anyway, that's my 2 cents. I don't want to rant. How many accounts, I'll go back to this real quick question here. Ryan says, how many accounts should someone have who is trading for a living have, like 5 or 25? There's no set number amount that you should have. It's not like there's a handbook that says, hey, you got to have 25 accounts. I have probably more than most people simply because part of this job is understanding all the different platforms and instruments and asset classes. So I need different accounts so I can test other things out. For the most part, I would say you could get away with, having 3 accounts. Okay, number 1 is going to be having that long-term retirement account. And you could call that your 401k, IRA, pension, whatever. That's the big bucket of capital. Number 2, for me, would be having an intraday, shorter-term trading account. And then you might have to have separate accounts for different asset classes. For example, you can't have a futures and an equity account in the same account. They have to be separate accounts. So you have a futures account, you have an equity account, you can have a Forex account, you can have an options account. So you may need to have different ones there. The only reason that I'm an advocate for having multiple accounts is I don't like to have all my money in one place. It goes back to my trust issues with these banks and financial firms. So anytime an account will get over $250,000, you should be very, very cautious. I don't like to let any specific account get over $100,000. Right? $250,000 is your FDIC insurance. $500,000 is your SIPC insurance governing securities. So I always keep accounts under those thresholds just to be safe. I don't know what's going to happen. I don't trust big government. I don't trust our banks, but they're a necessary evil when I need to open up these trading accounts. Let's see. What else do I got? Register as independent. Sorry, guys. I didn't mean to go down that political route. I certainly don't like going down the political route. And if you do have separate accounts, I think it really helped me, and it's maybe a word of encouragement for you guys, is make sure that you write the rules associated with that account down so you don't start crossing trading styles in those accounts. That's something that was a big problem for me early on, but I'm much, much better now. You mean your broker, not your banks? Both. So if, banks, you got to know that your maximum cap in your savings account should be $250. Never let it get above that because that's the FDIC. SIPC insurance with your brokerage accounts is going to be higher than that, but that's for money for securities, making sure your securities are protected there. All right. Yes, Indigo, I think you hit it right there. Don't let the propaganda machine, liberal or conservative, take over your mind. Right. And that's funny because they're pushing so hard. Well, it's the liberals, it's the conservatives. If you just go on Facebook for an hour, it's disgusting watching how many people go back and forth spreading fake news, fake propaganda for both sides of the aisle. It's like, I just turn it off. I just go right past it, do my own research, make my own assessments about who I want to vote for and policies, and move forward. All right. Thank you guys so much. That will do it for me for today. Monday, I don't believe I have a guest slated, which is good because I want to get to this other question that came through regarding moving averages. I think that'll probably be a good show. And candles, I'm going to tie in there for Josh, who was asking. There was a couple people asking about different candles and how we trade those effectively. So I'll bring that up on Monday's show, unless I get a guest, and you never know. Until then, guys, give me a little thumbs up if you enjoyed today's show. You guys always are pretty good about that. You can, of course, leave your comments and feedbacks below the YouTube channel or go to TraderMerlin.com to leave me more feedback. That said, cheers, everybody. Hope you have a fantastic weekend. Get out there, go vote. I'll see you guys on Monday.